Hi traders, it's been a long time since I last updated you with a letter or email or video, so I thought it probably quite appropriate today to actually get to do some updates for you. You would have noticed recently the introduction of the We Are Now status of all of our trades on the right hand side of your Signal page when you log in. This is pretty much updated within 10 seconds of our positions, so for all of you out there wondering whether we're long, short or flat in the market, whether we've been triggered into a trade or not, you'll simply be able to look at that status and you'll know within 10 seconds that we're actually in it or not, and you'll be able to follow our trades with much more accuracy and a lot more certainty. Hopefully your confidence will grow and trading will become a lot easier than it used to be because of this update. Right, the other purpose of this video is to give you a technique to enable you to get your entries just right if you haven't already learnt the best technique, and this is one proposal I want to make to you for you to practice and improve on. This is valid for all signals and signal services. It's not just us. Often signal services don't give you the information to be able to get the correct entries. You end up chasing the market, missing the entry by maybe 3, 4, 5, 6 pips, getting stopped out 3, 4, 5, 6 pips differently to the actual signal service, and you end up not making as much money as the actual signal service is reporting. I'd like to tell you that there is a way round this, and if you follow my instructions here, you should be able to start improving on your entries and exits. And here it is. I have here two randomly chosen different brokers. The top one is I've chosen the MT4 platform simply because the majority of you are using it. So here I've got the pound yen on the 1 minute on a WHC trader account, and here I've got exactly the same thing on a different account. Purely random, no particular reason for it. When you get a signal, say for instance you had a signal that popped up on your screen at this point here to buy the market at a price of 159.49, but you're actually fairly close to the signal here. The price is 159.47, and obviously with the price differences between brokers, I may have been reporting a price to buy that has already been broken according to your prices and your chart. So what you should do is have, say, a 1 minute chart up on your screen, and generally all of our prices that we provide to you are a break of the past high or low. So if for instance you look at your chart and you see, okay, at this point here when the signal came out I was told to buy at 159.47, but the price is already there, then what you do is you look back and you can see this last high here was actually 159.49. So what you want to do is only enter the trade and buy if it breaks this high. So the chart price has to break that high and then you'll be in. Now just to show you how different brokers can be inconsistent, you can see here this high here is 159.49 and this high here, damn, I can't, hold on, it's not showing the and this high here is actually 159.51, which is 2 points different. But nonetheless, the signal would have come out here. You would have looked back and seen, okay, the last high has not been breached, so I'm not getting in that trade yet. Let me just get back the previous chart. So similarly here, you'd have looked back, it hasn't been breached, therefore I'm not in it. So regardless of the brokers you're using and the spread and everything else, you can see by looking at your chart the relative price differences. This is lower, it hasn't broken that high, and again on the chart below here, this is lower, it hasn't broken the high. Regardless of the price I'm giving you, you know that I'm going to be a few points out here or there, or I might be spot on. It just depends on the different brokers. But you can use this technique very effectively to make sure you don't enter the market when you shouldn't be entering the market in close calls such as this. Now, the other thing I wanted to just mention, although I've pretty much kept up to date on the chat room trying to make sure everyone understands the concept, and that is, if you get a signal and you're not sure whether we're in the market or not, well, now you've got the "we are now" status indicator, which tells you whether we're in or not. So that will give you some confidence. But also, if you happen to have missed the entry, say we were selling, say we were told to sell at this price here, okay, which is 159.40. By the time you've entered your trade to actually sell at that price, the market may have moved down. In which case, you don't enter the market. You don't sell and give up 7 pips. You never do that. You never chase the market, and you never enter at a worse price than we indicate. And the reason for this is because 99% of the time you will be able to get the price we give you. There is always a small retracement. There is always another opportunity to get in. You don't want to be given any pips back as a result of following the trades, because as I said, 99% of the trades you will always get an other time and opportunity to get in. And here you can see that if our signal was to get in at this level to sell, you missed it. If we look across here, you could have maybe got in at the top of that. You could have certainly got in here at an even better price. You can look at any charts in any time frame and you'll see there's always overlap and opportunities to get in. Here, you've missed the opportunity to get in here. Say we buy at this level. Okay, fine. The next candle, it just came down. No problems at all. You get in then. You can see there's always overlap. Or there's always waves which give you another opportunity to get in. Don't rush to get in. There are, of course, situations when you don't manage to get in. Say here, we're told to buy at this level here at the end of that candle. Okay, next candle opened. Yeah, you may have been able to just get in, but you may have missed it, in which case, okay, it's off. But later on, so long as we haven't hit the profit target or the stop, we have another opportunity to get in over here. In some cases, it might just streak off with absolutely no rest. If it streaks off, then that's it. You wait. If you have an opportunity, you get in. If you don't get an opportunity, you don't get in. You miss the trade. Remember, even if you've missed a trade, it may come back, hit the stop, and may reverse, in which case you've not only missed out on being stopped out, you're now in the reverse. You can now get into the reverse trade. So there's always opportunities, and the biggest mistake to be making is to be trying to follow signals in a panic, making mistakes and losing out on those valuable pips. We're all here to make money, and if you slowly learn and adapt to our signals, you will very, very quickly be in positions where you can beat the numbers that we actually report on a monthly basis. Just keep practicing and you will certainly be able to make better pips than we report. In the early stages, yes, you may be not doing as well as we report, but that's simply because you haven't become a total expert. Some of our subscribers regularly report to us that they are more than happy with the signals and they've really adapted well, and they're making more pips than we make. So good luck to you and good trading. I hope this video was handy for your training and useful for any other signal services you may wish to use in the future. Goodbye.